So, Catherine, very good evening to you.
Well, good evening, Ian.
So, Mark Carney wants it to be done. Presumably you want it. Can it be done?
A free trade agreement? Absolutely. The sector has almost unanimously been pressing for this, an ambitious free trade agreement based on mutual recognition of regulatory outcomes, which would give access for EU institutions to London and for UK institutions to Europe.
Now, we have had on what is on the face of it a very pragmatic decision from the Bank of England today. Explain what they've done.
Absolutely welcome this. What they've said is that on the basis of regulatory cooperation, European institutions, European banks will be able to carry on operating through branches rather than going to the expense of setting up subsidiaries.
Which costs them a lot more in terms of capitalisation and
That
so
would
forth.
cost a lot more, and those costs would ultimately be passed to consumers, and it might encourage some banks to remove their branches.
Yeah. But there is a big caveat to this, which is, of course, that European and UK regulators have to be seen to be acting in tandem, in cooperation.
Yes, and that is absolutely possible. Indeed, we need to remember we've started from a position of complete alignment because, as we're part of Europe, of course we are, and I think the regulators are perfectly capable of cooperating into the future, and this is what we'll be looking for, not just for the relationship with the EU and UK, but actually we'll be operating on the basis of regulatory standards going forward as we do at the moment.
Now, some people will say, hang on a minute, this is the Bank of England putting the city's status as a global financial centre ahead of financial stability in the UK.
It isn't, because what the Governor is clearly saying is that they will look at how our counterparts in Europe cooperate. So there is that caveat clearly in there, and our regulators will always be putting stability to the forefront. But I think we really need to welcome what they've done here. This is a global gateway to capital, which is important, as the Prime Minister says, to EU as well as it is to the UK. But from our perspective, it's a sector which generates 72 billion of tax a year. To take an unnecessary step which would increase costs and deter people from continuing to operate in London would be a mistake, and I think this has been a really positive, pragmatic step today.
You don't think in any way, shape or form that the Bank of England has been lent on by the government here?
Well, I couldn't comment on that, but I think this is a very pragmatic step. That I think this is, after a really gruelling 2017, a very pragmatic piece of good news for the city. We have a lot of work to do next year, but this is a good way to end this year.
Look, I guess the real risk, though, is that a no-deal scenario now potentially becomes absolutely catastrophic for the city.
Well, a no-deal scenario has always been a bad thing for both the city and for Europe, and we have a lot of work to do next year, but it's perfectly possible to make a sensible solution here. We need clarity around transition as early as possible next year. We need progress on this ambitious trading relationship, but that's all entirely possible, and today has been a step in the right direction.
And how optimistic are you, Catherine, that the regulators within the EU will be happy to play ball with this? I mean, we've had some fairly wacko ideas that have come out of Europe in recent years, such as a financial transaction tax, which obviously would be a complete anathema to us here in the UK.
Well, I think it's in everybody's interests. And look, we're 10 years from the crash. It's in everybody's interest to look at international regulatory standards, what we need to keep global financial systems safe. EU regulators will be as focused on that as our regulators are. And there's, I think, every reason to believe that regulators will be able to continue cooperating into the future.
I guess the flip side of that, though, is what freedom will the city and the Bank of England as its regulator have to deviate from European regulations should it want to. I mean, Mark Carney, for example, has said very clearly dropping the cap on bankers' bonuses would be a very welcome priority for the city post-Brexit.
The free trade agreement that we're advocating, the ambitious chapter of a free trade agreement covering services, would lay down arrangements so that regulations could diverge if either side wanted, but it would set down an arbitration mechanism, a way of judging that, so that we could stay aligned as far as possible. So there would be freedom to move, but there's an arbitration mechanism in there.
Do you think ultimately this is going to mean that the UK regulates financial institutions from Europe rather as it does with the Americans, the Asian banks and so on?
It'll be interesting to see how regulatory cooperation develops, but what we're proposing is something which would give the UK its autonomy whilst working against the backdrop of international regulatory standards and cooperation.
And lastly, Catherine, any thoughts on what we heard from Michel Barnier today on the transition period? I mean, that's roughly what we were expecting, wasn't it?
It is roughly what we're expecting, and I think I'm tempted to say he would say that, wouldn't he? He would start from a fairly tough position. We've got to negotiate. As I say, there's a lot of work to be done in 2018, and we will see things move. Transition is as important to EU27 as it is to us, because it's going to take time to extricate to move apart smoothly and carefully.
All right, Catherine McGuinness from the City of London Corporation. Always very good to see you. Thank you for joining me.